Thanks for the kind words and thanks for the introduction. And thanks to Anurag. I think he laid the platform for the day quite well. I wish the Reality Plus team and the VC World team all the best for this conference, which they are putting together. A very interesting set of speakers and industry experts are lined up, definitely for everybody to kind of take their insights and take their inputs. And also, I think it's an opportune time for this discussion today, given that after the second wave, the country is starting to open up now, and the impact will be more and more visible in the next few months as things go along. Just a quick introduction about our group before I get into the topic and the agenda. I am part of Xander Investment Management. This is the private equity real estate arm of the Xander Group. We are an emerging market focused investment firm. India is a key focus market for us and has always been since we started the firm in 2005. Currently, we manage about $2.5 billion US in Indian real estate space in our strategies, which are focused across office, commercial, retail, industrial, credit, flexible working, venture capital, and a number of other investments that we kind of run. So at this point of time where we stand, we've all kind of been through the last 18 months. Anurag also referred to it 17 months. And it's been an extremely volatile period for the real estate industry in general. And it's been kind of a roller coaster ride for investors, sponsors, operators in the space. And I think that's going to continue at least for the next 12 to 24 months, depending on, because I think that this whole situation that we are all in and the whole world is in is not going to go away so easily. I think there'll be ups and downs, which will continue to kind of happen in the industry and in the space. But that also provides opportunity as we see as investors from our side. So now let's start from a bit macro understanding of the sentiment right now. So historically, even since the late 2000s, top down, if you look at it, you analyze Indian real estate market as an investor, as global investors do, the market continues to remain attractive because the macro themes which are on India's side here, including the demographic profile with a young population, expanding and more affluent middle class, growing urbanization, etc. All of that, looks really good. And for all of this, as India starts to, as one of the largest emerging countries in the world and starts to move up the development curve, one asset class which will play a big role in that entire movement is going to be real estate. So because the requirement of quality infrastructure, quality real estate also drives a lot of development and growth for any economy. And that's been seen historically across countries. But the problem happens when you start looking at things bottom up, which is where India starts becoming a bit challenging. I'm talking about investment into Indian real estate now, because there are a lot of execution challenges which were there when the sector started opening up early 2000s, and they still continue to remain. Whether it's be the changing regulations, land title issues, lack of transparency in the processes, governance challenges, delays in entitlements, development delays, etc. So that's what basically is the real challenge. Top down, if you analyze Indian real estate market, looks really attractive, looks great. Everything kind of checks out on presentation slides, Excel files, Excel models. But when you start to execute an investment plan, an investment strategy, that is where the challenges start coming up. And that's, I think, if we can solve the bottom up and the execution challenges that the industry has, then I'm with Anurag on the fact that sky is the limit and there's a lot of potential in the market as the international investors are going to see. But a mix of these two things, attractive top-down and difficult bottom-up, is also what makes India an interesting market to evaluate for international investors. Because it's a bit behind the curve compared to other developed economies in the world, and that's why it also throws up interesting opportunities. Now, let's move to the fact that what type of themes do we expect to play out over the next, Anurag said 5 years. 5 years is too long in right now to predict, given how volatile things are. But in the next, let's say 2 to 3 years for real estate investments in India. So first one is going to be there is a thirst for yield generally, globally. And the reason for that is that interest rates and yields which are available for competing asset classes have been going down globally with the large amount of liquidity which is at play in the global investment markets. So that has pushed the available options for investors in which they can invest into an yielding, income generating, stable asset class. And this is going beyond real estate. It's going into debt, credit, bonds, and those other investment asset classes, investment classes as well. So hence, I think this thirst for yield is going to continue. And even for India, I expect that a lot of majority of the private equity investments and in the real estate space are going to continue to be focused around this income generating / yielding assets. Number two, there's going to be a flight towards quality, which has already been seen over the last few years, whether it be for assets, whether it be for quality platforms, quality operators, teams who are able to manage their operations more efficiently, and across all of these aspects. Because as the general market is going to shift and the attention of investors is also going to shift towards people and teams and companies and projects who are able to differentiate themselves on quality. Third part, which I think is again something which is evolving over the last few years, is a customer-centric approach across all real estate verticals. Generally, real estate, I think, has lagged other industries in terms of taking the customer requirements on board and then executing them with the customer in mind. But I think that's changing. I think we're in the middle of that change right now. And I think that is also something which is going to continue. And investors' focus is also going to be on operators and sponsors who are able to connect directly with the customers in the maximum and the most efficient way possible. Fourth theme, which I think is going to be also playing out, is that the deal sizes in India will continue to be large, but the deal volumes will continue to be low. The reason for that, again, is to tie that back to what we talked about in terms of the bottom up, where execution challenges continue. Now, because of that, a lot of investors who've been investing into the Indian real estate space have now also had a long runway of operating in the country. Hence, they understand what type of partners, what type of platforms do they want to go with. And even though the sector has grown considerably over the last 10 to 15 years, but still the number of quality operators are still a handful. And I think they will continue to get the attention, and these larger deal sizes will continue to be mostly in the income generating operating space, like the way we saw in the last year as well. Generally, India has been tracking about 4 to 5 billion of private equity investments a year. But in the last year, I think just the large size deals, which is above $150 to $200 million, took up 80% of that volume, whereas the smaller ones, volume was low and value of deal sizes was high. I think that's going to continue. Now, REITs is also another very interesting addition that we've kind of been able to bring to the market, and that's been long time coming. But I think finally it's very good that that's up and running. Very key aspect on that is going to be, again, the focus that we maintain the sanctity and the quality of operators who are there and who have listed REITs in play. Currently, we have 3. I think the potential is significant with the whole market. There is a large potential for it to grow significantly. But if quality is not going to be looked at closely while we grow this REIT and go on this REIT journey as an Indian real estate market, then it can also result in a stock quite soon. It's been seen in previous markets, in other markets globally, whether REITs end up being, either the REIT market will end up being significantly large or it will just fizzle out over time. And the focus on that has happened in India as well in the past. If you see, just before this REIT space has come up in the last couple of years, public listed options for Indian real estate players and operators were pretty much dry for 10 years before that, and which was after the run which happened between 2007 to 2009. So I think again it's a very, very good addition to the market, and I think it opens up a lot of avenues for investors, and it's also looked at positively from an investor standpoint that a country has a operating and spreading and growing REIT space, because it also provides an exit for private equity investors available in the public market. So we need to nurture that part very closely, and hopefully the market will continue to focus on quality and thereafter continue to grow the REIT space as well. Now let's come to asset class investment outlook. Anurag also mentioned his thoughts on a few of these. I'll try and share what I kind of see happening in this space. So let's start with office. A lot of talk around work from home and the downsizing of office space in the last few months. All of us have kind of heard it, read it. I think from that standpoint, it's going to take a bit of time before things do stabilize in the office market. Overall, the market has been resilient over the last 1.5 years as well from an office space. Tenants have continued to kind of and cash flow has continued to come through. But the problem here is that tenants need to come back, and that's going to happen only when occupancies need to go up, which will happen once the vaccination program is expanded and the cities open up more, which start happening by Q4 of this year. But once that happens, we believe, and we strongly are quite bullish on this sector overall from our side. We believe that the whole technology BFSI segment, which drives the office space in India, is performing really well globally, and there might be actually more inflow of business into India as was witnessed after the last global financial crisis in 2009, when Indian office and Indian businesses got a lot of demand between 2010 and 2013-14, which kick-started this whole cycle about 10 years back. So we think that the fundamentals of the sector will continue to remain strong and it will continue to drive demand. It's actually reached a decent size of its own, office with 600-700 million square feet of operating space, decent quality, some of it not, let's say, to institutional grade A quality that we investors will be interested in. But again, the market will pick up, and this will continue to drive office. I believe, given the size and the scale, will continue to drive the maximum chunk in the pie of real estate investments in the future as well. But they will be focused on larger platforms, larger operators, because then with their scale and with their size, they will be able to provide better quality service, better quality operations, and better customer focused mindset to their clients and tenants. Overall occupancy experience for tenants here is very important. Operators who are able to focus on that and pick that quality up will stand to gain both from an operational standpoint and also from an investment standpoint. Coming to retail now. So obviously it's been tough for retail over the last 1.5 years, with the shopping centers not operating at all and everybody rightfully staying indoors. But I think as things do open up, which is by Q4 of this year, there will be a strong pullback, which we expect in this sector. We are very long on this sector. We believe that this is a very integral play to the whole consumption story which is a key evolution which is happening in the Indian demographic space. So we expect a very strong pullback here. Long-term value remains intact, which has also been also seen in across markets wherever things have opened up. I can tell you from example here in Singapore, when things have started to open up a little, retail is back very, very strong and very, very fast because people need that entertainment and that outing, which is a very key part of how all our Indian cities are structured. Industrial, very strong performance in the last couple of years. This is a sector which was actually lagging behind the other sectors before the last 2 years, I would say. Continues to attract a lot of capital because this, I would say industrial right now in India is where office was maybe 10 years back. There is a lot of demand, there is a lot of requirement. Whatever stock and whatever projects are available right now are mostly low on quality. That is why there's going to be a lot of development on industrial side. International quality development is already underway. Some platforms and some investment series have already happened, and I see that this will continue to attract both investors and quality operators in the medium to long term. So industrial will remain strong. Coming to residential now, 10 years ago, residential used to be what used to take the largest chunk of the investment from a private equity space in India, maybe 70%, 80% in years. That's gone down considerably. The sector has been slow over the last few years, and I personally felt always that there was a major affordability gap here on this. So a lot of reorganization is underway, whether it be from a regulation standpoint, product standpoint, pricing, as Anurag also mentioned, and even operators. Consolidation is ongoing on this sector and will continue. Customers today have more choice in front of them to choose. The power is back in the hands of the customers. I think this whole investment, residential as an investment market, which used to drive maybe more than half of the sales which used to happen, is reducing, and that's what will continue to be the trend here. End consumers should be the target of sponsors and operators and developers here, and if you're able to find a product which fits in whichever market you're in, which is able to target the end consumer and attract, and also then at the back substantiate that with track record and delivery, I think those operators will find both consumers and investors coming for partnership. We at Xander are continuing to evaluate this sector. We have been approaching this through the credit side, given that we felt that the economics are not so attractive on the equity investment side here for the last few years. But we are tracking this now, and let's see how the space picks up. But I can see maybe in the next, towards the second year from today, if the fundamentals continue to remain strong and operators are able to pivot themselves to focus on the customers here and establish a delivery track record, I can see the equity investment on this space picking up from where it has been over the last few years. Then there are a few alternative asset classes which are picking up pace: data centers, student housing, flexible working, rental housing. Now all of these are starting from a very low base right now, but they will continue to grow, some of them more strongly than the others, and continue to find their niche in the Indian real estate investment space. And growing as we move forward, I do see that maybe 10 to 20% of investment which happens from a private equity investment standpoint into Indian real estate will start happening towards these alternative asset classes, which effectively a couple of years ago was literally close to zero. Now, lastly, I'll just try and spend some time about what should be the focus areas for sponsors and operators in the Indian real estate space from an investor's side. What are the things that we as investors, while evaluating an investment or an opportunity, would like to see for sponsors, operators, developers, and we ourselves are a sponsor and operator. So these are the things that we focus from our side as well. So firstly, I would say that people should find their niche and go deep in it. Diversification is good, but doing too much at a point of time is also not something which has generally been successful, I would say, in the market. So hence, one or two sectors or segments should find your niche and then go deep into that particular investment theme or sector or segment that you want, because real estate in itself is quite wide and vast, right? So that's how we also think about it. We also focus our investments as investors into one or two or three key focus areas at a point of time, and then we try and spread ourselves out with other portfolio investments that we do. Secondly, I would say focus on quality over quantity. It's not about doing 5, 10, 15, 20 projects at the same time, but whatever is being looked at, quality is what will get you over the line. I would say in general, the quality focus over the last 10 years has improved. That I have to give to the sector, but still it calls out for a lot to be done. I think in general, as real estate professionals, investors, it's for us to effectively set the benchmark, set the standards, and that will in general take the whole quality of the entire segment and the entire sector up a notch, which is what our target should be. So from a sponsor, operator, developer standpoint, focus on doing quality projects, and then that will also earn you a premium on pricing over competition and also attract investors in the future. Number 3, this is something which we've seen a lot over time, is effectively don't hold on for the best deal or the best price. The market is a moving market. You have to understand what is the core of the business model that you are in, what is the target of the business company that you're leading. You can never time the market, right? It keeps on changing, it keeps on moving. Hence, go with efficiency. When somebody wants to go and do a deal, go for efficiency and speed rather than anything else, because in today's market, things can change very quickly. A deal which is on the table right now for somebody to do might not be there 6 months down the line. So if you just delay it, hold on to it too long, market might change, it might go to the other side. Hence, focus on what exactly is the core of your business model. If it's development, if it's land aggregation, then do that and move on to the next thing, so that you can have, again, and try and triangulate all of this so that you can have your niche and go deep into it. Number 4, I think this is something which is very close to us as a group. Non-negotiable governance, compliance, and compliance with applicable laws. I think this is something which is taken, I would say, a little lightly in the Indian market compared to what we see across other markets globally. All our laws are very robust in India, but we all need to, as an industry, as a team, as a group, focus that this has to be non-negotiable. There should be no discussions around this is okay, this is how it happens, and around those things. It's non-negotiable. From an investor standpoint, I can tell you that anything of this nature is a complete red flag for any institutional investor globally. It has been a bit of an issue for investors investing into India over the last few years. So a bit more focus on this with a complete non-negotiable red flag mindset would help in getting the investment focus, investor interest that you are going for. Number 4, and lastly, I would say technology integration. The opportunity that you have as sponsors, operators to differentiate, innovate. Some of these are very wide statements used very often, but in the new age, as we see things for the next 5 years, what will differentiate successful from the have-runs? I think technology will play a big part. And real estate as a sector has been lagging in its adoption of technology. I think the last 1.5 years has given a lot of us, and most of us have kind of spent time on that, I'm assuming. We have a lot from our side at Xander. So I think technology integration into whatever it is, technology can be there in almost everything that is done in the teams that we have, right? So I think this is going to continue to drive focus. Along with this, the last thing I would say, sustainability. It is something that again is coming to become a focus for investors globally, and also operators and sponsors within India. I can see that a little bit. I think if this can also be integrated into the development strategy that somebody is executing, or a plan that somebody is executing, then all these 5-6 things will help in getting investor interest, and also in delivering successful projects which will end up adding to the bottom line, and also helping through sustainability, through community, through environment, helping the next generation to keep the balance in terms of what is available. So with that, these are just some thoughts from my side. It's very difficult, as you would assume at this point of time, to predict anything, but I think some of these things, if they are kept in focus in the investment and the development strategies that people are executing, I think they would help the market in general, and hopefully help in creating better quality infrastructure, better quality in real estate, better quality projects over time.
Some very informative address and thought-provoking points that you mentioned, not only the challenges and potential of Indian real estate, but your advice that the focus should be on specialization, quality of product, execution of product, compliances, as well as integration of technology and sustainability in projects. In short, how has pandemic impacted investors' sentiments overall, and with reference to Indian real estate?
The answer to this question, first of all, would have been completely different if it was 1 year back, let's say July of 2020, right? August of 2020. So, but now I think 1 year later, I think there is a lot more comfort around the fact that this is a disruption. We will all get over it, and we will move beyond it. From a real estate investment standpoint, I don't think that generally people have not changed their outlook, because real estate is a 5 to 10 year horizon investment outlook, and all the fundamentals still continue to be attractive. People will get over this. Hopefully this whole COVID-19 pandemic situation will get behind us in the next, we don't know when, but it will at some point of time. But after that happens, I think the investment outlook from an investor standpoint is continuing to be positive. So I think that focus will remain, because the fundamentals are still strong, and that is not changing. So even from our standpoint, we took a 6-month pause when this pandemic situation started in March or April of last year. We said for 6 months, let's just see how to react, because at that point you're in value preservation and capital preservation mode, which I think is true for mostly individuals as well, not only investment firms. But after that, I think once people got a little more comfortable, I think by Q4 or Q1 of 2021, Q4 2020, Q1, actually sentiment had improved significantly. But obviously this second wave has now come and hit the country very hard. But I think overall sentiment, long-term sentiment is positive. Till the time this disruption is going to continue, activity is going to be very muted. But that will also come up with pent-up demand at that point of time. Okay. I think globally we've seen wherever things have opened up, investment activity has picked up fast as well. And even the whole movement of people, usage of infrastructure, people coming to offices, people going to retail shopping centers, as even Anurag referred to it in Delhi in the last 4 weeks, numbers are very encouraging. So I think because there is pent up demand, and there is this whole thing about people to kind of put this behind us. I think that's how our mentality is. We are all optimists at some point of time. So I think once that happens, I see the investment outlook to improve as well.
Okay.
I don't think any long-term dent in the investment outlook for India. Don't think so.
Okay, fantastic. So fundamentals are strong, investors are optimistic, and it's just a short roadblock probably, and we'll definitely be back to where we were, the positive markets. So thank you so much, Arpit, for sharing your time, sharing your views, and I'm sure our audience had some very valuable takeaways from your videos. Thank you so much.
Very much, and wish you and the team all the best and all the success.